Hi, my name is Stephen from Share Navigator, and I'm going to show you how to complete a profit and loss table for the long call strategy. So you can see here the first box, if you like, is the long call strategy with data input. So anything that's highlighted in yellow here, you're going to have to input some type of data in. Anything else, it'll be automatically populated for you. So let's go ahead and do an example. Let's say we wanted to do a long call on Apple. So we're going to tick into where the ticker symbol should be, and we're going to change that to Apple. And the current share price of Apple is, let's say, 112.76. The trade date, well, today's date is November the 28th, so we're going to change that date to November the 28th. And you can see here option number 4, it's a call option, so that's automatically populated for you. You don't need to do anything with that because it's automatically populated. Let's say we're going to buy 3 contracts and the expiry is December the 16th, so we leave that alone. The action is automatically there to buy, and the strike price we're going to pick, let's say, is the $110 strike. And the premium that we're being asked to pay here is 235. So the next thing we come along to our trading commission. So if you haven't placed this trade already, you're going to have a guess at your trading commissions. But if you're using interactive brokers, you can use for something like a 3 contract trade, you're talking about $2. So we'll put that in there. And what's happening here is the system is automatically calculating what your premium or your cost is per share, including your trading commission. So even though we paid a premium here, 235, when you add in your trading commissions on top, it actually moves up to 236. And then our probability here, that's going to be given to you by your broker. If you have a good broker, you're going to have a probability calculator, which will tell you how likely your trade is to win. So let's say this trade is a 62% chance of winning. So then we get on to the next section, and this is some of the outputs that are going to come along. So you can see here that our max loss is $707. So this occurs when the share price finishes below our strike price of 110 at expiry. So with the long call strategy, you want the share price to continue to rise. But our max profit is classified as being unlimited. And the reason for that is as the share price continues to rise, so do our profits. So we're going to do a profit and loss table in a moment, and you're going to see that. And our break-even price is 112.36. So in other words, the share price must trade above that point in order for us to start making a profit. So we've just included some notes here on the trade. We're saying look at the profit and loss tables below, and we're saying that it carries defined risk, which is good. You cannot lose any more than your investment. But there's also a warning here that call options are time wasting assets. So remember that you only have until expiry for the share price to rise. So please be wary of that when you're using this strategy. That's why we like to go out over a longer period of time, and we tend to use in the money call options. So lower risk or novice option traders should switch to the bull call spread. And the other thing about the long call strategy, you're better off doing it when the implied volatility is low. You shouldn't really do the long call strategy when implied volatility is high. So let's go and look at the profit and loss table. So these are what if scenarios. What we're saying here is, well, if we get to expiry Friday, in this case December the 16th, and if the share price is at a certain level, let's say it's at 100 or 101 or 102, what would that mean for us in terms of profit or loss? So the first thing we put in is the debit we paid for the trade. So remember, we bought 3 call option contracts at a net cost of 707 when you include trading commissions. So no matter what happens to share price, that's a cost for us, and it will always be there. So that's in the net debit paid section. Underneath the value of the long call at expiry. So the system is automatically calculating out here what your 3 contracts of the Apple 110 call are worth. So you can see that call options have absolutely zero value in them when they're out of the money. So you can see with this situation below 110, there's no value in those call options here because the call options are out of the money at that stage. But when the share price is at 111 at expiry, we're now getting $1 of value. We did 3 contracts, so that equals $300 of value, and so on and so forth. So the final column is just your profit and loss at expiry. So the system is adding, the debit that you've paid plus the value of the call at expiry, and it's giving it to you here. And if it's highlighted in red, it's a loss. Anything highlighted in green is a profit. So you can see here we're not making any profit till we get up over the 112 mark. And you can see there that the profits continue to rise as the share price continues to rise. So you can see we're going from a 193 profit at if the share price is at 113, right up to a 2,593 profit if the share price gets to 121. But you can also see here that our downside risk is capped. We can't lose any more than $707. So all we've done then is put it into a graph form. So again, that's just representing those results in a graph. You can see here, this is our loss, which is absolutely capped. And as the share price starts to rise here, you can see we get across our break-even point and our profits start to rise here all the way up as the share price is rising. So the long call strategy, it's a really good strategy to apply when implied volatility is low and you think the share price is going to rise. If implied volatility is high, you should consider another strategy such as the short put or the bull put spread. We would encourage you to practice placing the long call strategy in a simulated trading account. So if you're watching this and you're not a member of Share Navigator, we would encourage you to come onto our website, sharenavigator.com, sign up, and we'll give you a personal simulated trading account where you'll be able to practice putting on the long call strategy in a simulated environment, and you'll also get to win cash prizes every month if your portfolio outperforms some of our other members.